Yeah, so with China Internet up around 15% year to date, we do expect quite a differing setup for 1Q earnings, which is the March quarter. We're expecting around 20% earnings growth from Tencent, but it's like kind of mid to high single digit decline in earnings for Alibaba as they reinvest into e-commerce growth. But as we look into the year to date performance, then Tencent has been up around 25% year to date, and Alibaba has been mostly flat. So we think it's mostly priced in of how the first quarter setup is looking. But as we look into the results call, and we also have a TechNet conference in next week, all of these are what will management comment on the second quarter. We're seeing that games are reaccelerating at Tencent across their domestic and particularly international pipeline, while for Alibaba and e-commerce, we've seen stronger than expected parcel growth in the past 2 months. So these would be the key commentaries that we look out for into the results and earnings calls.
Ronald, on Baba, I got to ask you, March quarter, they bought back nearly $5 billion of their own stock. Do you think they're done, or are we listing out for more?
Yeah, so shareholder return is one of the 4 key themes that we highlight for China Internet, which is shareholder returns providing a downside protection to our stocks, which are either in very value territory or in the GARP territory in terms of PE multiples versus their growth rates. For shareholder return, we expect Alibaba's full year buyback plus dividends is tracking at around high single digit of market cap. That is the amount that they buy back their shares plus an annual dividend that we expect to be declared in the results. For Tencent, it's around a mid-single digit shareholder return policy from buybacks and dividends as well. So these 5% to up to nearly high single-digit % return of capital do provide some of the key themes that we expect, which is shareholder return protecting the downside, while we expect the fight back of the incumbents to be the key theme for this year as well, with Alibaba fighting back e-commerce market share, and that starts from GMV, that starts from parcels, but gradually translating to that ad revenue and therefore a turnaround in EPS trajectory in around 2 quarters.
Ronald, how lean is advertising revenue going to be for the China Internet names, given the uncertainty that continues in the broader Chinese economy?
Yeah, so e-commerce will still be the key driver of advertising, which is what we call performance-based or ROI-based, and therefore merchants are still focusing on the highest efficiency channels to place their advertising. This is the June 18th setting up for the next shopping festival, so e-commerce names will still see strong, we call performance-based advertising. But within our subsector preference, we like internet verticals, which are less exposed to the end consumer tracking of consumption every week, every month. Verticals like online music, like online recruitment, online freight matching, these are our preferred subsectors, which is the internet verticals. There's also education and games that we expect this strong online penetration driving for online education and games, with accelerating titles growth from the 2 key publishers, which are Tencent and NetEase. And therefore, for advertising, particularly non-performance-based, it's one of our less preferred subsector, which are the search-based or non-transaction-based ads will not be as solid, given that we think merchants are spending on where they could track the ROI of their investments.